have found that, uh-oh, guess we're starting over.
Welcome to the Lender Lounge. I'm Lindsay. I'm with Brad Waldman, and we're talking everything mortgage and real estate today. How's everything going with you, Brad, down in Florida?
Now that we're recording, I think we're in good shape.
We're in
Uh,
great
think
shape now.
things are good. We're just a little rainy this afternoon.
Yeah, I'm hoping the storms will hold off so we can finish this podcast. But I got storms up here too. But back to what we were talking about before I realized that we were not on air or not recording. How's real estate down there? How's mortgages? How's things compared to last year?
So I would say that things are pretty similar to last year. We're pushing harder. I would say maybe I'm working a little harder for the same results this year, but um, nothing out of the ordinary. Obviously, we want to do more business, whether it's for me, whether it's mortgage or real estate. But I've done more real estate transactions this year. I'm actually quite busy doing that right now. But mortgage has been pretty steady, similar to last year. I think rates have kept us from really excelling where we would like to be with our numbers, but at least we're not falling backwards.
Yeah, no, that's important. And how's the real estate down there in Florida? I know some areas, is it like a seller's market or is it buyer's market? Is there an influx of homes available?
So I'm working in the Tampa market and outskirting Tampa market area. My opinion from what I'm seeing is that it's a buyer's market, but sellers have not yet come to that realization. I've negotiated several contracts that we really couldn't get much ground with a seller not wanting to come off a price or pay closing costs. And then I've had other scenarios where we're able to get all the closing costs paid, a discount on the property price. And in one case, I actually negotiated a roof to be put on at closing.
Nice.
So I think it's a great time for buyers. You do have to pick and choose your battles. Not all sellers are going to negotiate. And some sellers are just going to sit on the market and until they realize that they're either overpriced or they have to give some concessions.
Well, and what I've noticed is that if you are in a very highly sought school area, if there are people wanting to move into that area, they're getting multiple bids on, a lot of homes that are move-in ready. But there are a lot of, renovate homes, homes that you could buy with cash and fix up. A lot of people just don't have that ability. But if you're willing to go a little further out and you're not focused on one school district, Metro Atlanta still has some good deals. It just depends on, the locality and how desired it is. Is that kind of what you're seeing down there in Spring Hill?
There are some properties that are getting multiple offers. There are some properties that will sit for 60 days, 65 days, and then get multiple offers. Uh, in my most recent search, we were really looking for a pool home. And to meet the necessary criteria, there were only seven homes available in the county that I could see that made sense for this particular client. And in a normal market, I would expect to see more like 15 homes or 20. So the pickings are slim if you're looking for very, very specific things, but there's still enough inventory out there to find a home. It does take, I think, a little more patience than what we would have seen maybe last year, for example, to find the right fit. And then, of course, in Florida, we have strange tax ratings. So you really have to look at how much taxes are on a property. I spent the last several months looking with a client out in Winter Haven. Thankfully, we were able to find a property that was suitable, but many of the homes in that market, for example, have taxes on, we'll just say a $300,000 house. We're seeing taxes that are $5,000 and $6,000 a year in some
Yikes.
cases. Those houses are sitting, and then you have other homes where the taxes maybe are 12 or $1,300, $1,500. Those homes tend to move a little quicker.
I understand that. I mean, that's one of the things that goes into affordability on everybody's payment is taxes, insurance, HOA, principal and interest. And I always tell people it's really not the principal and interest. 1% lower is not really that drastic of a payment difference. It's the taxes, the insurance, the mortgage insurance, all of that. And when you're looking at a $300,000 house with $7,000 in taxes, you have to look at something else in that price range that actually has something that is more reasonable. A lot of times the reason why somebody up in the metro Atlanta area would have taxes like that is because it's been an investment home and they never had any kind of homestead exemption. And obviously you're going to get reassessed when you become a homestead owner, but you can't always guarantee that that number is going to go drastically down. You won't get hit on that investor piece.
Right. So my lights are flickering. That's the storm outside doing a number on the electrical lines. I have a generator. We've talked about this before.
Yep.
Great investment. I lose power all the time out here in rural Florida, and that generator kicks on, and it's like we didn't have any issues, nothing to worry about as
Well,
far as
it's good.
power.
Yeah, it's good that you're on your phone instead of a computer because if you lose, you'll have Wi-Fi on your phone. But unless your Wi-Fi goes down, then you might be in trouble.
Well, it's flickering, so if I lose power, it'll come back on pretty quickly. Um, I forgot what we were
We were
talking
talking
about.
about the real estate values, and yeah, I think we were talking about. I don't remember.
Sorry, I got distracted by the lights flickering.
Well, and the thunder is outside my door too, so I think it's kind of just trying to pass and kicking back up. But um, yeah, so tax bills, that's what we were talking about.
Taxes, right. So your taxes are going to be based on what the current owner has in Florida. And sometimes you'll note that as an investor or as a rental home or a vacation home, the taxes are significantly higher.
Hmm.
And that does deter some people from buying specific houses, even when they're priced well, because that monthly payment to start is very high. When you take
Yes,
a $3,000 tax rate versus a $6,000 tax rate, that $3,000 in taxes makes a difference in your payment. But
absolutely.
eventually, those numbers even out, but it takes a good year and a half, sometimes 2 years before the tax rating catches up to you.
Well, and I don't know if you guys have this, if it's something that's standard, but when insurance goes to run an insurance quote, I did not realize, I mean, they can see past claims on the property. They can see a lot more than what you and I can see, on real estate and mortgage. And I really never thought about it, but the previous claims on a property can absolutely go into the price that you get on an insurance premium. And that goes into when you have a tax bill, if you're buying a home, you have to go off the seller's taxes. That's the same thing in Georgia until you're assessed as the owner, which is the following year usually. But the insurance, it's important to get a couple of quotes because depending on if you have a new roof that's being put on at closing, thanks to Brad and his negotiating skills, you can absolutely get a better price on a insurance policy. But all of these things are going to affect prior claims on your renter's insurance. All those go into those insurance quotes, and a lot of people don't think about that.
So the first thing I look at when I'm helping a client shop for property, particularly a first-time home buyer, we're looking at the real estate taxes on the property to make sure that they're in line with the property value so that we're not going to put them in a higher payment right off the jump. The second thing I look at is the roof. If that roof is more than 20 years old or very close to 20 years old, your insurance is going to be double
Yeah,
what
and it's
you would like
probably
it to
not
be.
going to cover full replacement. It's going to be ACV, right?
Correct. And a lot of homes in the markets that I'm helping people with have old roofs. Unfortunately, sometimes even a roof that looks good. The great example, the property I mentioned that is getting a roof. That roof probably it's 23 years old. It probably has another 5 years of life. It looks great. I had no idea how old the roof was when we pulled up to the property because it looked great. But once my client identified this as a property they wanted to move to the next level on, I looked up the roofing history and realized, gosh, this roof is past its life expectancy, at least for the insurance company's purposes.
Right.
So we're going to put a new roof on it, which is a shame because it has more life, but we have to protect the client going into the transaction. Most most people are not thinking about a roof when they're buying a house. They just look at it, is it leaking? No. Okay, let's go forward. I dare to say that a lot of real estate professionals are not evaluating that as part of the
No.
offer that they're making.
Well, the problem is listing agents. I mean, if you're not having that conversation up front with the seller, you're kind of setting people up for failure because if you're listing a house that has an 18-year-old roof and all the insurance, that they get a quote from says, hey, we're not going to insure anything over 15 years without, full coverage. We'll do ACV or, you know, that's putting the buyer in a detriment. Plus, what a lot of people don't understand is when that roof age is that, your premium's going to be higher, but you're also going to be out that money. When that roof finally does go and you have ACV coverage, you've got maybe, they say, oh, the roof is worth 3,000. Your deductible is 2,500 and the roofer says it's 20,000 for the roof. You're coming out of pocket with that if you have ACV coverage. And so it's something that people always, they never, even when the agent and I bring it up to the client, say, hey, you've got to think about this. You're buying a house and this roof is 14 years old. They don't think it's a big deal until they start going to get quotes for insurance. Then they
Right.
find out real quick.
Roofing is important. HVAC is important. I'm not the type that looks to ask for a bunch of small repairs when we're negotiating for repairs, but I do look at the main items that one would have to deal with, the big ticket items, and we try to set the client up to have at least an initial entry point into the home where they're not going to have any major expenses.
Yeah, no, that's important. It's good looking out for a client to make sure that they're not going to have expenses right off the bat. You know? Let's see how's everything going, and we've got mortgage rates are holding steady. They're a little stubborn, but I know they're going to get there. I've heard some predictions that we might be closer to 5.5, or I mean, yeah, 5.5 by 2027, or sometime in 2027. I know we don't like to talk about rates. My biggest thing is that I feel that there are more people sitting on the fence than there ever have been. And, you and I have talked about it. I think a big barrier is capital gains tax. A lot of people are holding out from selling because of the 500,000 or $250,000 limits if they're single or married. I think that would help a lot. But, I think that if we could get rates with a five in front of it, I think it's going to lift morale in the housing market. It's going to, help builders keep continuing building supply so we don't run out, of homes because of right now we're still short like 4.5 million homes. So, um, obviously we have to get something moving the market. What's
Nobody
your
can
thoughts?
accurately predict where rates are going to be.
No.
For a long time, I could predict the cycles with the information presented, but nowadays you really can't. There's no rhyme or
Many
reason for
wild
where.
cards. There's too many wild cards, and everything is so technology driven, and everything we get is news in an instant, and that has a way of rocking markets. I mean, we could hear something, in Iran, and it's 2 in the morning, and by the time it happens, futures are down. And that's how it works. I mean, they say that if America sneezes, the world gets a cold, but it kind of works the same way that if something bad happens, if Japan's GDP or, if their inflation numbers go up, it affects us as well. So, I feel like a lot of the real time technology that we have has made it even more hard to read.
Sure. I've stopped trying to predict. I know that we will see better rates in the coming year or two, but my advice to clients has been pick the house that you're interested in living in. Make sure you can afford it where the payment is. Obviously, we need to buy within our means, but we're going to have to worry about the rate later. You're going to have to do the best you can do when you buy the home, get the best price you can get, and
Yep.
then work on finalizing a new loan strategy down the road when the market's more forgiving. The good news is if you're buying a home now where rates maybe are higher, you're going to get a better price today, and
Hmm.
or maybe your closing costs paid, and or maybe a roof put on your new home, versus waiting until the market improves and then you're competing with 10 other buyers for the same house. That's a whole
Exactly.
different problem. When rates were in the twos and threes, I had clients paying 60, 70, $80,000 over ask, guaranteeing that they'd pay above appraised value. And many people wrote huge checks to
Yeah.
get a property. Some clients were taking 6 months to find a home when rates were below 3% because everybody was buying a house back
Yeah.
then. Now
Yeah.
there are fewer people out there buying homes. Still, I would say still a solid amount of people out there shopping, but there are less people than I would say historically speaking we've seen. So get out there and try to get a good price on your new home and focus on what you can accomplish today. Fix the loan later.
Yeah.
You will have a refinance opportunity. There's almost no doubt about that. 20 years ago, 22 years ago, when I started doing this, there were periods of times. There was a period of time where rates were 4.25%, and then not that far after, I remember writing loans at 7.5, 7.75, interest only on
Hmm.
228 arms, where
327s and 228.
you got a 2-year arm at 7.5%, and in 2 years it's going to go to 9% potentially, or 9.5%. So, and they were interest only loans, so you were just making interest. People were buying homes in droves back then with those kind of rates. I would agree and give the people that would say homes were much more affordable back then. Correct, they
Yeah.
were. That's not going to change my opinion today, though. Homes today are more expensive than they were 20 years ago, of course, but at the end of the day, they're going to just continue to get more expensive.
Yes.
I don't think prices are going to fall in many markets. Maybe they'll flatline, maybe they'll dip slightly, but I don't see any major fall offs coming.
No, we did. We have a shortage of homes, and the problem started after the crash of '08, when the builders went bankrupt and they had homes. I mean, literally land cleared, pipes, put in and never finished them because the market fell out and they stopped building for practically a decade. I mean, it was a while before we saw builders start back up, and they had a period where they should have been building like 35 million homes and they only built like 7 million. And it's that kind of put us in this pickle. And I mean, God forbid we have a mass, like a lot of people were to pass away, but like I don't know how, if people keep having children and households are formed, like how do we get out of the mess when we don't have enough housing? I mean, some people are just going to have to rent, but there's some communities like Texas is coming up with a community where they are building these homes that I'm not going to call them tiny homes because they're not. They're like the cookie cutter postage stamp homes that are on like 1/15 of an acre. I mean, like such a tiny little sliver, and it's tall, but I mean, you could probably reach across and reach the whole house, from it's crazy. And they're selling them for 100,000. I mean, is that going to be the answer? Is that we have to go smaller and just use less land for each thing? Or,
Who knows? I think maybe that fits for some folks. I would say that if I didn't have a family to support, I would probably go with a very minimalistic
oh, yeah.
housing situation. But I've got, an army of children and such. So, we have to have a house of a certain size and such. But um, It really just depends on your budget. I think owning is always better than renting. We've talked about that
Oh yeah.
pretty much every single time we've done one of these podcasts together. Owning is always going to come out better. You're always going to find that owning a home is better than renting in the end. There are situations where renting makes sense for people, but I think to your point, there are builders out there building right now, but the birth rate in the United States is much lower than it's ever been. So I do
Yes.
think that the death rate is going to outpace the birth rate, and eventually maybe it'll things will even out. But
You actually have a really good point. I think that that's because the boomer age is, the older age, and then my generation and down, they've had less children and the birth rate is going down. So that could contribute to a little bit more balanced housing market in, say, a couple decades, maybe 10 years, 10, 20 years, something like that.
sure,
Yeah, I mean, that's smart. And there's a lot of, I've seen it started during COVID, but it's actually gotten more and more prevalent that parents are gifting money to their kids for the down payment on a home. And they're deciding, hey, you know what? I can wait and give you this money and I will, but I want you to buy a home. So I'm going to give you $100,000, put it towards a home. I find those, kids to be incredibly lucky because they're getting to buy a piece of the American dream, a little bit earlier than they had planned to. But that's one of the biggest things that I think a parent can do is set them up. you know, it's hopefully they would be productive members of society and be successful and wouldn't need the inheritance. So help them to get into a home now because the values, there's only been, I think, 5 years in the history of housing appreciation that the appreciation rate did not go up. And it only went, it's like 3 or 5 times that it's ever gone negative. And it was, 3 or 5 years total out of 100. So to me, that's one of the best things that a parent can do for a child. And we call them kitty condos, but we can actually do financing where we can help you build their credit and also help them buy a house instead of staying in the dormitory, staying in an apartment, that kind of thing. And a lot of people don't think about that. With school coming up, it can be a lot more affordable to buy a house and rent out the rooms for, your kid to have roommates and actually help them build credit and build equity.
sure. And for those of you that don't have parents that have the ability to gift you any money, you do have access in many cases to down payment assistance programs. I do have a lot of clients that will use 401k assets as down payment. Many people are unaware that you can do a hardship withdrawal from your 401k, have a lower tax liability because you're buying a house with that money, and you can use that money to put down on your house.
Yes, it
It's
has to be a primary home. I believe it can't be an investment home. It might be able to be used for a second home, but every 401k um, uh, administrator has different rules based on your company. But a hardship withdrawal saves you a good amount in taxes when you're buying a primary home. It exempts you from having to pay some of that early penalty.
I've used 401k for part of my down payment on this house. And I've had many clients. My brother, at one point, actually multiple times, my brother has used his retirement account to come up with down payment money. That's an easy place where you're saving money that you don't always realize you're saving money. And there's not anything wrong, in my opinion, with using that retirement account to get yourself into a home. Buying a home is an investment. I don't care what Dave Ramsey or anybody else, for that matter, says. Buying a home is an investment, and it's a good investment into your future.
Yeah, and it's funny. A lot of people that I ask, especially younger people, I'm like, "Do you have a 401k?" They're like, "Oh no." And then I get their pay stubs and I see, $2,400 year to date contributed to a 401k, and I'm like, "Hey, you have a 401k?" And they're like, "Really?" and then they get with their HR department. It's crazy. Check your pay stubs. You might not know that you're saving money, or maybe your company is doing a match. And that's a good way to be able to save money without really seeing it impact your paycheck because it's pre-tax. And then when you're ready to buy a home, go ahead and take the hardship withdrawal and only pay, some of that penalty tax instead of all of it.
Correct. That's helped a lot of my clients out over the years, and I always look at that as a potential. But aside from that, again, you have down payment assistance programs normally at the state level, sometimes at the county level.
Well, and
You
you don't even have to have that much money down. When I talk about 100,000, I mean, a lot of people have that misnomer, that myth in their head that I have to put down 20%. And everybody's got the bad PMI in their head. So I can't pay PMI. I can't pay PMI. PMI is really, I mean, it's the least you should worry about when you're buying a home. If you wait to save up that 20% down, you're going to miss out on so much appreciation and equity gained that the numbers don't work out. You would have been better off buying that home with 3 or 5% downing and letting it appreciate with the MI.
I am not a tax expert. I'm not a professional accountant. I don't have any credentials that would warrant me
No, me
giving
either.
tax advice. However, I do believe, if I'm not mistaken, and this is something you could probably Google, I do believe that the PMI is tax deductible if your income is below a certain threshold.
I
And I
actually
don't,
had marketing do a flyer on that when the tax laws changed, and I can send it to you, but it's a housing related one, and that's one of them. So it's absolutely true.
do you know what that annual income is?
And they raised it and I want to say it was like 194 or 200,000. I can't remember.
That's significantly higher than I remember. I remember it was 105,000 or something, but this is years ago. I
Right.
remember looking that up. I haven't looked it up in quite a while, but you can
They
get on
also
the internet and find that.
Yeah, and that was some of the tax laws that got changed. There was another one that they changed the salt deduction, and salt is your local tax. How much you pay in property taxes, people who pay local taxes on things, and it used to be a $10,000 maximum. So if someone had 8,000 in property taxes and other taxes, they would exceed it at 10. That's one of the good things, and you wouldn't think that you would hit 10,000, but there's a lot of people who hit, 10,000 on the salt pretty quickly. So that's another change. But, home equity lines, you have to, check on that. There's a lot of different tax benefits that you can take advantage of that they have implemented or changed for the better for next year, for the 2026 tax year. Those are good things to bring up, Brad. Way to go. How's the storms going over there?
Quiet outside now. My lights are still flickering, but that could just be a power line or something down the road.
Yeah, it's quiet over here now. It's just raining. Oh, well, and that new the road to home housing bill. I'm not too thrilled about it, but one of the things that has been touted in the industry is they're going to allow manufactured homes that have not been removed from the chassis or I mean, I don't think that's a good idea. And here's why. And I know you're in Florida, so you would know this. Like manufactured homes, they really need to be attached to a permanent foundation because it gives them more structure when a storm comes, that they're just not blown away. And if you're not on a permanent foundation, you're on a chassis. I don't feel like that is good for the homeowner, nor do I feel like it's very good security for the lender.
I'm not a structural engineer. I don't know uh, all the mechanics behind building a manufactured home or what goes into it. I am not a big fan of manufactured housing. If that's what you can afford and you feel good about it, I'm not somebody that's going to tell you not to purchase one, but we do try, if we can, particularly here in Florida, we do try to find something that's considered a block home because you
Stick
do
built.
need, well, block home is different from stick built. A block home
Oh,
is a concrete. uh, a
Cinder
concrete
blocks.
cinder block structure. Excuse me. I
Oh,
say
nice.
so. Those are very common in Florida, whereas in Virginia, where I'm originally from, stick
Yeah.
built homes are more common. So your interior is usually going to be stick built, but your exterior walls are concrete.
Cinder block.
They're
Yeah.
cinder blocks. So in many cases, that's what you want in Florida if that's what you can get. I try to advocate for block homes because when it gets windy out here during a hurricane, it's windy.
Yes.
Your roof may struggle, but your walls won't.
Well, and unfortunately, and I'm with you. If it's all you can afford is a manufactured home, and I tell people manufactured homes depreciate. They go down in value. If it's not attached to land, that is like a car. It is going to be worth less over the years. So absolutely buy a stick-built home. But I never heard of block homes, and yeah, I know exactly what you're talking about. Um,
The
uh,
majority of Florida existing construction, I would say, is block home. I don't have the percentages, but everything that's built now new is a block home, at least the first floor.
Well, one of the good things that I think USDA did, which it was a pilot program to be able to use manufactured housing with USDA. And USDA to me is one of the best outlets for me to do 0%, zero down, 100% financing for someone who's not a veteran. And we have a lot of rural areas outside of Metro Atlanta that are eligible. The key is finding a house that meets their requirements. I mean, new construction would be excellent. That's, manufactured home is brand new and, you're getting it brand new, unlived in. But a lot of times I've found that the manufactured home has been moved. The manufactured home is 21 years old and USDA is 20 years old at the time of closing. That's always going to be a moving target number as well. FHA has, what is it, July 1st, 1976? Is that right? I think that is. For manufactured home, the oldest that they'll go. Um, but you have to be careful with those manufactured homes because it makes it very hard to finance if they've been moved after they've been set at their original spot.
I think a lot of properties built after 1994, if I'm not mistaken, 94 has a lot of weight in whether or not you can finance a manufactured home. There are,
94?
yeah, there are a lot of restrictions, particularly, for example, with the Florida bond program when you're trying to do down payment assistance. I believe it says 1994 in their guidelines. So there are a few things that I've run into, and I finance manufactured homes regularly here in Florida. I'm
Mhm.
not here to tell somebody you shouldn't or can't buy it, but you need to understand what you're buying. You're going to have trouble selling it later. Your closing costs are going to be higher
Your
on a
rate is
manufactured
usually
home.
higher.
Your
Yes.
rate is definitely higher. The
Yeah.
closing costs are higher because you have to have an ITBS report in many cases because the original sticker is not in the property or it's something that can't be located. Then you have to have a structural engineer
Yeah.
certification on the property. That's a $650 report. The ITBS report, I want to say, is another $600. So you're talking $1,200 just off the jump, and then your rate is higher as well.
Correct. And, you also, it's on your agent. A lot of times I've found that listing agents will list the property and the title has not even been retired yet. I ran into one situation where it was a inherited property and it was already sitting on land that was owned, but it was never detitled. It was never turned into real property from personal property. And they almost could not find the titles to actually get it retired, opened up an old safe that belonged to dad, found the titles. We were finally able to close, but even the retiring of titles after closing is a whole process. And, we have attorneys that will do it, but they charge for it because it is a lot of paperwork. It's, making sure that you're getting the T234 form, depending on what state you're in, it could be, different form number, You have to do affidavits of affixation, or, there's all different nuances with manufactured homes. So working with a real estate agent that knows, what to ask for on a manufactured home is very important, because I've gotten a buyer, 3 weeks into a process, and find out after the appraisal comes back that the manufactured home was moved.
I would classify manufactured homes in the same category as condos. Very, very challenging in some settings to sell later on because the financing options are dwindled as the property gets older.
Well, condos are about to have a big change, because August 3rd, there will be no more limited condo reviews. So even if you're going to put down 50%, and I, there were the last few years, I kind of I didn't refuse, but I told people, listen, if you're going to buy a condo, I do not want to work on that unless you're putting down 10, because we need to go limited review. If we go full review, there's so many things that could just kill this deal. And there were still deals that got killed on limited review because of deferred maintenance, pending lawsuits, all sorts of other things. And now, they're going to raise the budget requirement. They're going to eliminate the investor concentration, so that's good. But no more limited reviews at all. So I feel like condos are going to get harder.
For the layperson out there, the difference between a full review and a limited review just comes down to the scrutiny that the underwriting department is going to put on the collateral of the property. In layman's terms, I would just say what you need to know is it's going to be harder to finance condos. That's just the simplest way I can put it. And you really need to, if you're buying a condo, you really need to understand what you're walking into and what your exit strategy may be if that's not a permanent residence for you, if you're not going to stay there forever.
And just like Brad said, buying a two-bedroom home is going to sit for longer because it's less desirable. Buying a condo that's a one-bedroom is so hard to sell. I don't know if it's that hard down there, but in Metro Atlanta, the one-bedroom condos, they sit for a while. And I had a small investor who's a veteran, and she bought 5 condos, and right now she can't sell 3 of them because they're no longer approved, and they don't allow investors. So she's got to find a cash buyer who wants to buy this condo and live in it as a primary home.
There are people out there that exist that just need a one bedroom property, but far and few between.
But have
It's not
cash.
that makes it even harder. That's a very tall order. And that's what kills condo values. If your only audience, your targeted audience to buy is a cash buyer, you've eliminated 98% of your potential buyer pool out there.
Exactly. And that's why the value is pretty much the same as when she bought it.
That wouldn't surprise me one bit.
Yeah. It's sad. That you really just don't see the appreciation rates in condos that you do in single family detached. Even townhomes can appreciate at a much higher rate than condos will.
There are condos out there. I was looking today, actually, out in Tampa. There are condos that are 10,000 square feet that are selling for $20 million in
Yeah.
the primo part of town. Point in bringing that up is there are certain condos that will appreciate based on where they're located. Down
Well, but
Virginia Beach, oceanfront, those condos tend to appreciate very well because they're right on the ocean.
Well, and before you get all excited and say, I'm going to go buy a primary home that's an ocean condo and just go spend my money, I had a buyer who was getting out into a single family home, and he had a condo, a high rise condo in Biscayne Key, Florida. Um, and you can have the nicest place in the world, but if you have an $80,000 special assessment and your HOA has gone from 1,300 to 2,400 a month, it is very hard to sell it.
Very true.
Yeah.
Very
But
true. My advice to everybody is to try to find a single family home or a townhome if you can help it. If you definitely want the condo lifestyle, you just need to know what you're buying and make sure that all of your diligence is done. Your lender will do a lot of the diligence for you, as will your real estate agent. But you have to hire people that know what the heck they're doing, because if you hire somebody that's just going to sell you the property and not understand what you're getting into, they're setting you up for failure.
Absolutely. And there's a lot of money that goes into buying a home when it comes to, inspection money, appraisal money, condo docs. A lot of people get a rate on inspection and these other things, and all of that adds up. And the last thing that I want to do is disappoint you. So whenever I have a condo buyer, I tell them up front, listen, this is not going to be an easy road. And you may not get this, and it may come down to the condo docs, or it may come down to the appraisal. We really don't know. And the HOA is not going to willingly give that information up until we pay for the condo docs. So that's just the way it works. And unfortunately, if you don't want to go through that circus, then go find a single family home. Land is going to appreciate at a much better rate. Anything that's tied to a piece of land that is your own, that is fee simple, that is ideal. That's how you want to hold it.
We're doing a condo right now for a client in Pennsylvania. I'm not the one writing the loan. One of the guys on my team is writing the loan, but I'm helping with it because it's complicated. I'm helping with the paperwork and such. And I ended up having a chit chat with the real estate agents involved, because the property is FHA and VA approved, but it's not currently eligible for Fannie or Freddie financing, which is one of the very few times I've ever encountered this
Yeah.
in my 2 decades of doing this for a living. And after chatting with the real estate agents, come to find out there are some external decks on some of the units. There's about 20 or so decks that need to be redone, and Fannie and Freddie are not willing to finance those properties or allow those properties to get standard conventional loans until those decks are completely replaced. But
Yes.
the FHA and VA approvals are already done, and those are not things that are going to come up. So, very interesting situation you don't encounter very often. And, we talked about all this with the client, and, she's comfortable based on knowing that the decks are going to be replaced. But I had to have that conversation with the real estate agent. You're not going to be able to sell this property very easily in 5 or 6 years when she's ready to sell, which was her estimate of when she probably would be moving up. If you can't do a Fannie or Freddie loan in there, you're going to, and your FHA approval expires next year. So you're going to have potentially only VA in cash, or non-traditional financing for non-warrantable condos. You're talking about a 25% down payment, a rate that's 2 points higher than the standard rate. And
A
uh,
buyer's got to really want to buy that condo to take,
sure.
that deal.
Well, we vetted all the potential issues, and it looks like it's going to be okay, but she's
Well, she
aware.
wants it, but what you're telling her is that on the flip side, when you go to sell this, you've got to find another person just like you, basically.
Correct. Unless something changes. And those are conversations that I think a lot of lenders, a lot of real estate agents are not having with their clients. They get you under contract, they do the job you hired them to do in terms of getting you to the closing table, but there are bits and pieces missing that may impact you later that you really need to be looking at in terms of the investment quality of the collateral you're buying.
Well, and that's why it's really important. I actually did another interview with Market Watch, and it was about shopping for a mortgage. And it doesn't matter what rate you get quoted. If that person does not have the competence to get you closed, or they miss something in your file that should have been caught in the beginning, and you don't close, what good is that eighth better in rate when you don't get to close? And it comes down to working with someone who's got the experience, who knows how to get through problems. I talk to them about, a lot of people just think there's banks and then there's brokers. No, there's also correspondent lenders like us. But when you are shopping, you can shop for rate. You can look at box one and look at, the fees compared to the rate. But it comes down to who is going to know their stuff and fight for you, because in my situation the other day, I had a flood cert came back that it's in a flood zone. We fought it. It's, hey, it's not in a flood zone. I went to the insurance agent. He pulled a flood cert. It's not in a flood zone. They still fought us. They said, no, this is a flood zone. So what did our team do? We had Erica pull two more flood certs that were show it's not in a flood zone. So instead of us having to force this, buyer to take flood insurance, we basically went with the other two that showed they weren't in a flood zone. A bank would not have done that. I don't know if a broker would have the ability. I don't know. I just don't know. And those, who's going to know, hey, we should question this. This doesn't show up on the website. This doesn't show up as on the listing. The sellers don't have flood insurance. Is this really necessary? Like people don't really, there's a lot of people in this industry who are not going to look at those things. And you need to work with people who have the experience to know to look for those things.
I would never suggest that somebody automatically takes a rate that they consider high. There is some level of making sure what you're getting is reasonable and it's within the market parameters where rates are. I'm not suggesting you shouldn't shop for a rate. That said, there are things that your hired professionals will sometimes do for you that give you a leg up. I'll give you an example, and I'll toot my little horn a little bit here because I don't mind tooting it once in a while. I have a client that has been shopping for 4 months for a house, just shopping every single week, unable to find anything, multiple offers on everything that they've tried to purchase. And I got a text message last week. Maybe it was last Thursday actually it might have been Tuesday or Wednesday this week. I don't remember exactly when. It was a couple days ago. And when I got the text message from an agent that I work with regularly, I've actually done several mortgages personally for that agent. And he texted me and he said, I just got an offer on a property and you're the lender. The pre-approval is from you. And I'm going to negotiate this offer instead of the other ones because I know you and I trust you. And I dare to say the only reason this client is getting that house is because I have an existing relationship with that listing agent. Just
That's
sort of
awesome.
random, just sort of happened in that, and that has happened to me many times
Yes.
during my career, particularly in the Virginia Beach market that I've grown up in as a mortgage lender.
Mm-hmm.
Just because I don't live there doesn't mean I don't still have a little bit of clout or a little bit of room to help you beyond the mortgage. So not only did it help my client, but it helped the buyer's agent who has been relentlessly trying to find them something. Working with the right people will sometimes help you get to the finish line.
Absolutely. I mean, I've seen many times where, they saw my pre-approval and basically said, hey, we're going to take this offer. We know Lindsay knows her stuff. She's thorough. If you're going with a big bank and they send a pre-qual, which are, those generic, letters, oftentimes the seller is not going to go with it, even if it's the best offer, because they're not sure if that's going to close. Um, it really pays to work with people who have a great reputation and know what they're doing and can convey that to the listing side. And one of the things that I do with a lot of buyers, especially if it's a competitive market, I'll do a video and basically record a video explaining I've done this for 24 years. I never write a pre-approval that I cannot back. I have fully reviewed the income, the assets, the employment, the, ran underwriting, ran credit. They are good to go. They are excited to make an offer on your house. We hope you'll consider their offer. That goes a long way with the listing agent. If they don't know me already, now they've put a face with a name. They know that I'm accountable. There's not a lot of banks that are going to send you a video to send to the listing agent. There's a lot of things that we can do to make your offer go further.
The other thing that I'd point out is as somebody who works both as a real estate agent and as a mortgage lender, you have to answer your phone. I answer my phone almost religiously, 9 o'clock at night. I don't want calls that late, but
Right.
if somebody calls me and it's important, I'm going to answer the call.
Mm.
Um, I can't tell you how many deals get done or contracts get ratified because I simply just answered my phone when somebody else didn't.
Mm-hmm. Yep. That's one of the things. I mean, I get a ton of people, either, recruiters or people wanting to buy my house. I don't know. I'm on a do not call list, but these people call me